One of the most overlooked tax strategies out there is paying your kids who work in your business and taking a tax deduction for it. It's a great tax strategy, but you got to make sure you're doing it properly. And the rules and process is different whether you're an LLC or an S-Corporation. Now, I want to break that down for you today. I'm Sorensen. Let's build wealth. Now I want to talk about why you would even do this. Well, we're doing it for tax deductions. If I can pay my kid $5,000 to work in my business, I get to take a $5,000 tax deduction on my company return. Like that's a $5,000 expense, lowering my taxable income, $5,000. If I'm in a 1/3 tax bracket, that's going to save me like $1,600 in federal and state income tax. But the nice thing about my kids, those under age 18, they likely don't even have to file a tax return because they're under the standard deduction and they will have no taxable income to them. So there's no repercussion to them where they're picking it back up as income, but there's an expense to you. And this is where the tax benefit saves you. Now I want to get to some ideas on what to do once the money is paid to your kids. Maybe it's reimbursing you for expenses you pay for them. Maybe you're throwing it into a Roth IRA for them because now they have some earned income. There's a lot of other cool strategies you can do about it there. But for now, I want to talk about how you actually do it and take the deduction. All right, now let's talk about how you actually do this. Let's say you have an LLC. This is the easiest one here. Maybe it's a Schedule C sole proprietorship. Maybe it's an LLC that owns a rental property. Either way here, it's an easy method where you can pay the kid reasonable compensation for the services they render. And let me make sure you understand, they actually have to work in the business. Okay, I'll give you an example. My kids worked in my business. They came and cleaned my office, my law firm office with a lot of employees every weekend for years. Okay, that was their job on the weekends. We'd come in on Saturdays. I'd go work in my office and they would clean the office. All right, now I paid them for that, a reasonable compensation of what I had to pay a cleaning company. So I want you to make sure you understand this. Your kids do actually have to work in the business, but that's a great thing in and of itself. It's not just a great tax strategy. It's a great time for you to work in the business with your kids and then learn hard work and how to actually earn money. Let's not just pay them and take a tax deduction if they don't do any work. One, that's teaching them the wrong things. And two, it's not an actually valid expense where you could take a deduction. So they actually have to do work and the amount you pay them needs to be reasonable. Now let's say I paid them $500 a month for cleaning the office. Now through the year, that would total up to a $6,000 expense. Now in the sole proprietorship, if that's what I had, Schedule C, I'd take a $6,000 expense for the services that I had for cleaning of the office. Well, let's give another example here. Let's say you have a rental property and your kids come and work on the rental property with you. When I was a kid, I worked on my dad's rental properties. I would go mow the lawn with him on weekends, all right? Now, I don't think he was expensing that. In fact, I'm certain he wasn't, but he could have. Okay, he was actually paying me to go mow the lawn. It was $10, not a lot of money, but he could have at least taken a deduction of that, and I had to do that at least 6 months out of the year to go mow the lawn on his rental property. So whether this is mowing the lawn, cleaning the office, doing your bookkeeping, managing your social media, helping you shoot videos, going to your events, I don't care what it is. As long as there's work being done by them, you can pay them a reasonable amount as compensation for that and take a tax deduction for it. Now, there's no age requirement here. They just have to actually be performing services that have real value. Now, they could be 12 years old and performing some of these services. Now, taking a deduction for paying your kid who's 5 to do work in your business, I'm a little skeptical about that. Now, I always get like the dentist or the doctor or someone who's like, yeah, but my kid's on the website. I'm a pediatric dentist and there's a picture of my kid on the website. They're in my marketing. Okay, maybe you could get away with that as a modeling fee. That's a little aggressive in my opinion, but that's for you to decide. You can talk to your accountant, your tax advisor on whether that's a legitimate or not. So I would just look at what would be the real amount you would pay for that. Would you actually have incurred that cost to go hire someone else to be the model, to be on that photo shoot, to be on the website, the brochure, or whatever it may be? Because this needs to be a reasonable expense you would actually incur in the business. What I'm not trying to do is just create an excuse to pay my kids. So let's make sure it's a reasonable expense and actually incurred. Now let's get to this part of actually incurring the expense. You do actually have to pay them from the business. So there'll be a transaction, whether this is a check or a transfer from the business account over to your kid's bank account. This is why it works best if they're a teenager, they're old enough to go establish a bank account in their name. You'll be on the bank account with them as the parent or guardian, but it's actually an account where they are an owner and they're on the account and you know this is an account for them. Now this account is where the transfer is going to come from your business account, or you're going to write a check into their name, which will get deposited into this checking or savings account that's in their name. Now I've created the transaction history. I've actually paid them. The company's actually incurred the expense. Now I'm going to be able to take the deduction on the company tax return, whether it's for the rental property or for the sole proprietorship business. Now, whenever you hear this video, you can of course start implementing that strategy for the year that you're in. A lot of our clients do this at year end in December. It's kind of the end of the year. They're seeing how their business is going. They're like, I want to take another deduction here. My kids have worked in the business. Let's pay that out in December so that it gets in year end to be taken on that year's tax return. All right, now I want to talk about U.S. corporation owners because you've got a different approach on this, on how you need to do this. Now, up on that LLC example earlier, there's no LLC, there's no 1099 for kids under age 18. There's a family business exception where you don't need to issue that stuff. But in an S corporation, the rules are a little different. If you pay the kid out of the S Corp, you actually need to issue them a W-2. Now, we don't like that. So we do what's called a family management company. So if you have an S corporation that you own, let's say this is you, and your kids are performing services in that business, rather than paying the kid out of the S Corp, we will pay the money. Let's again say it's $500 a month that you're paying them, $6,000 total. We would pay that $6,000 over to an LLC or a sole proprietorship. This could just be a bank account, sole proprietorship. And what happens here is the S corporation takes a $6,000 expense for the services it's receiving from the family management company. And the family management company, which could be a sole proprietorship in your name, it's going to be an LLC or just a bank account, doesn't matter. It's going to hit Schedule C on your tax return, is going to pick up this income as $6,000, but it's going to pay it out to the kids and it's going to have a $6,000 expense. The net of this is you got a $6,000 deduction in your S corporation, lowering your taxable income and what could come down to you as being taxable. You pick up $6,000 in the family management company, but you expense that back out because it's paying your kids. And so in the end, you don't pick up any income. You take a $6,000 deduction. That $6,000 ends up showing up to your kid, who again is working in your business, providing actual real services. But they're under the standard deduction of $14,600 federally. Some states are a little bit lower. It might be $7,000 or $6,000 in certain states where you have to file a state tax return. But here in the example here, $6,000, the kid does not have to file a tax return and it's not taxable income to him. So the net effect is $6,000 reduction you're saving on taxes. And so the maximum amount you could pay your kid for federal purposes and for most states is $14,600. Now, if you pay that maximum amount, you want to take that as a deduction in your business, you can. They just have to really be performing services at that value level. Now, some states again have a lower standard deduction amount where you would have to file a tax return if you pay over $5,000 or $6,000. Just make sure you understand your state standard deduction. I don't have time to get into all of them here in the video. Now, again, in this example here, no W-2, no 1099. We're under this family business exception here where you don't need to issue that. You get a deduction and the kid is not picking it up as income. Now, for your kids 18 or older, you will need to issue them a 1099. Some of you might have kids in college or even in high school that are 18, and if you're paying them to work in your business or help provide services, even to rental properties, any examples I've gave here, you can still pay them, but you will just issue them a 1099. Now, if it's an S corporation, kid over age 18, no reason to have to do this. Just pay them out of the S Corp and 1099 them. Back here, again, just pay them out of the LLC, but again, you'll have to 1099 them because they don't fit into this exemption with the family company where you're not required to issue a W-2 or 1099. All right, now the last strategy I just want to throw in here is, what do you do with this money that you pay your kids? Now, some people just reimburse themselves back, for the sports or the dance or all the activities that they do, and they just transfer it back to their personal bank account for all these expenses they incurred for their kids. Some of them like to invest that money for their kids and open up what's called a kids Roth IRA, which we do at our company, Directed IRA. So let's say you had this example here where you paid your 13-year-old $6,000 over the year, $500 a month for helping clean the office or do whatever they're doing in the business. Now that $6,000 could go into a Roth IRA in their name. They have earned income. They didn't file a tax return, but they did actually have legitimate earned income for work that they did. So they can actually contribute that money into a Roth IRA, which they could then learn how to invest and grow. Wouldn't it have been awesome if your parents did that for you when you were a teenager? Every retirement account example we've ever seen talks about if you just started investing earlier and did it in your 20s or your 30s, look how big your account could be. And we hear that, and I know it's always frustrating to hear that. But what if you did it in your teenage years? Well, this is what you could help teach your kids how to grow and invest for the long haul. The Roth IRA is a great strategy for them. The one other thing I'll just note on the Roth IRA is, remember the amount of money you put in a Roth IRA, the contribution, in this example, $6,000. Let's say you did that for 5 years, okay? From when your kid was 13 to 18, you put $6,000 in, you can actually do $7,000 a year in a Roth IRA. But let's say you did $6,000 a year for 5 years, $30,000 you put into that Roth IRA. Now let's say the account is now worth 50K. Well, you can actually pull out the contributions of 30K whenever you want. It's only the earnings and growth that go until you're 59 and a half. That's one of the great benefits of a Roth IRA. So if your kid's going to college and they're 19 now, and that 30K you've been putting in over that 5-year example I gave, you can pull that 30K out to go pay for their college expenses, living, whatever things that they might be doing, job training, starting a business. Any of those things are legitimate, no tax or penalty to get that money out of the Roth IRA, but then all the earnings and growth they had will keep building up for them later in retirement at 59 and a half. Roth IRA is a great strategy to combo in here. We do a kids Roth IRA at our company, Directed IRA. They could invest in crypto and stocks and real estate and private companies. They don't just have to buy a crappy mutual fund or ETF. They could if that's what they're into, and I don't mean that like negative. I shouldn't say it that way, but I'm just saying you have a lot of options on what you can invest that kids Roth IRA account into. Now, I've got a lot of strategies on how to build and grow wealth, save on taxes, protect your assets. Please make sure you're subscribed to my channel. I'm Matt Sorensen. We'll see you next time.